Hey guys, Boris last one from BK Forex. Welcome to our daily Forex technicals for 4:15:13. Dollar yen fills out the 98 gap, and the question now is it going to go up or down after this fill? Past performance not indicative of future results. Trading Forex carries a high level of risk, may not be suitable for all investors. High degree of leverage can work against you as well as for you. Before deciding trading such leverage products, you should carefully consider your investment objective, level of experience, and risk appetite. Possibility exists that you should sustain a loss from your initial investment. Therefore, you cannot invest real money you cannot afford to lose. You should be aware of all the profits associated, of all the risks associated with trading on margin, and seek advice from an independent financial advisor if you have any doubts. The information, including commentary and trade ideas provided on bkforex.com, should not be relied upon as substitutes for sensitive independent research. It should be informed for making investment decisions. BK Forex LLC and BK Forex Com are providing this information for general information. Information and opinions presented do not take into account any particular individual investment objectives, financial situation, or needs. All investors should obtain advice based upon their unique situation for making investment decisions. Should tailor trade size and leverage according to their own personal risk appetite. BK Forex LLC will not be responsible for any loss of current investment risk on investments made by readers and clients as a result of information contained by BK Forex LLC. We do not render investment, legal, tax, or other professional advice. Sufficient advice is needed. Seek competence of a professional advisor. Well, again, obviously the front of the show today. Let me just pull this up. I'm actually going to pull up like a tighter. You can look at the half-hour chart. You can see the collapse here. This is after the Chinese GDP came in weaker than expected, and it created a perfect sell-off storm for the yen to fill in the 98 hole and all the way down to 97.50 after all the stops were tripped. And then, of course, now we have a sort of a tepid bounce above 98. If you go back on the longer-term charts, I think we talked about this in the weeklies, but here it is basically. We've filled the gap, and I think now the front question is where do we go from here? At this point, it's clear that 99 support, which held for about 4 or 5 days, now becomes resistance. That's the classic tech look at how you would be looking at this chart on a longer term basis. So if we clear 98.5, we could make a possible route to 99, but that is really where you're going to encounter much more severe resistance given the pretty sharp sell-off. To the downside, having filled the gap now, 97 is a natural next level of target for the shorts. It's also, though, a relatively decent level of support. This is where we broke out from on this final leg towards the 100. So this is where we're kind of looking at. I think the breakdown to 98, you see 97.50, again, that is break towards fresh lows here. Could open another run towards 97. We're going to have a much stronger test. If we recover for the rest of the day, the topping out is likely going to be around the 99 level as that becomes the new resistance after being former support. Euro got attacked by the sell-off in the yen as well. But here's the interesting thing, and this is what I was saying. If you look at the dailies, you can really see this quite obvious. The euro chart on the dailies was actually much more bullish than I think you could justify by any fundamentals. You see this value proposition that got bought. We finished up pretty much near the highs. Today we tested the lower end of it, but nowhere near breaking the lows. And I think if you look at the 4-hour chart, you can see how the test basically found support around the 30.50 level here. It didn't even break down to the 30.30s. The key thing here, though, for the euro is, of course, again, for this thing to be bullish, we needed to get above 31.50, and at very least, sort of the highs here at around 31.38. So we need to clear this in order for it to have an unambiguous bullish bias. And until we do that, it looks like a little bit of a distribution, but it still holds. I mean, the whole thing about the euro is the bias remains relatively positive until it holds sort of these lows around the 130, ahead of the 130. But it becomes more positive if it breaks through the 31.50s. If we break down to the 130s today, if we sort of distribute all the way down and take out the 130s, that's going to create a much more negative construct. And you can see this on the dailies. This is, I'll go back to the dailies, just a more. If we break basically the lows here, this whole candle gets completely and totally rejected. The wick basically gets completely annihilated, and that would create a much more negative, I think, construct for the euro than we presently have. Presently, we still have a naturally upward bias for the euro, looking for this 31.50 breakout as the key level. But we're obviously definitely getting a little bit of resistance here at the 3100 level. This euro yen distribution has certainly weighed on the euro decline. And you see the euro yen is also sort of finding a little bit of a value proposition here, but I think in many ways the function of the euro is going to be dependent on how well the yen stabilizes at these 98 levels. Let's go back to the yen just to look at it again. How well the yen stabilizes. Now on dailies, it's actually looking more or less okay. See, filling the gap and then starting to stabilize around here, back up to 98.5, and that puts a euro yen in a better structure, and it puts euro in a much better structure. So we'll be watching that all day long. What is negative, though, however, is the Aussie. After the Chinese data, the Aussie really broke hard. You see, it took out the 104.50 level, just complete topping out formation here at the 105s. You can see this on the 4-hour charts that the trade was kind of very negative, and we're still basically sucking wind here off the bottom. If we get further risk liquidation as the day progresses, there is a very real probability that the Aussie could come back down and test the 104s and really distribute pretty hard. Let's go back on the 30-minute chart just to see this. You see how it just kind of bouncing around. The lows here, I think, what was it, 16.17? Yeah, lows get taken out at 16.17. The run towards the 104s is highly probable. On the other hand, if we're stabilizing here, if this is sort of a shelf of stabilization, we need to take back out this 104.50 level. That's the level we broke through here on a critical support level, technical level. And if we can take out the 104.50, then you could pretty much argue that there's a recovery in the Aussie. We could make it back up to 105s. So levels for the Aussie to watch for the rest of the day: break down through the 104.15s, break up through the 104.50s. In the euro, it's the hold at around 103.50 basically, and a move back and sort of a breakout through the 13100s first, and then the 131.50s to confirm the full breakout to the upside. And for the yen right now, it's whether we hold the 98s. The key thing here is if we break down 98s, we test back to 97s. Is that going to be a double bottom? Or do we go further to the downside? If we break down 97.50s, it's a very, very negative construct for the yen. We hold around here and start to rebuild towards 98.50s, then the worst of the sell-off in the yen may be over and the gap filled. We could see some stabilization. And lastly, I haven't even talked about the pound yet because it's just not much going on. Of course, we had the big liquidation here off of the risk move down, but there is really, when you look at the pound, it's just basically chop of this area. Although again, and this is the pound that breaks the hearts of everybody. It tests new levels and then comes right back off it. Although having said this, the key thing with the pound is that after it tests the new levels, comes back off it, it tends to stabilize. So here, the 53 level, 52.50 will be the key level to see if we can stabilize it, unless the pound has just made a long-term secular top, which means that, remember we talked about the idea of 55 level as being the level that the cable is being run to. If maybe we petered out in front of the 54 level, the bottom line is 52.50 gets broken. This is going to become the new swing high, and the structure in cable is going to look a lot more negative as we go forward. So that's pretty much how everything shapes up for the day. A lot of action already in Asia, but of course the North American session I think is going to put a pretty interesting resolution to probably a lot of these levels as we go forward. So again, yen to 98, 98.50 to the recovery side, and below 98 to a further crash. The euro up to 3100 and ultimately to 3150 for a much more bullish longer term impulse. And the Aussie, whether it holds 104.15s or comes back and recovers through 104.50s, basically knocking off most of the negative action from Asia Pacific session. This is Boris Schlossberg wishing you guys the best of luck and the best of trading. Over and out.